Hello everyone, so we are going to look at end of year adjustments. So these end of year adjustments, these are actually, because you cannot keep your books up to date, there are actually some end of year adjustments that you have to do at the end of each accounting year to represent the transactions. Are we together? For example, we have transactions like these are some of the transactions down here that need this end of year adjustments in order to keep your books that are up to date, because these transactions may occur when you when actually they have not been paid for. For example, maybe we may pay for something or an expense and we do not receive it in that year. So those transactions have to actually be incurred or be written down when they actually occur. Are we together? So an example here, we see we have accruals and prepayments. We are going to see what they mean. We have bad debts and provision for bad debts. We have transfers to reserves. We have issue of shares. We have dividends. We have corporation tax. We have closing stock, and then depreciation on non-current assets, or call them the fixed assets. So we are going to look at the entries and what to actually do to them and how they affect the different accounts. We're going to start with accruals and prepayments. We are going to start with accrued expenses. Accrued expenses, these are expenses that actually the entity incurs but has not yet paid for them. So they will have to be moved to the next period. Are we together? So yeah, they're saying these are the expenses which the entity consumes or used in production but are still outstanding. We have not yet paid for them. That means they are demanding us these expenses. They actually become current liabilities. Are we together? That we have to pay for the next period of time, because this money we are moving it to the next year. So the entries here, these are the journal entries. They have said you debit the income statement and you credit accrued expenses. So there are actually three, how can I call them, three adjustments that you have to do. An example here, they've told us the trial balance figure, in case you have a trial balance, and they're showing you that the salaries for the financial year ending are 6.2 million. Then they tell you, however, accrued salaries amounted to 250,000. Are we together? That means these salaries have not yet been paid for that year. So what are the journal entries that we do? Since this is actually a current liability, and we said that these are liabilities are credited, so we credit accrued expenses while we are debiting the expenses account with 250,000. Are we together? Then in the income statement, we shall actually add this 250 of the accrued salaries to the salaries to actually make the actual figure, and this will be the figure that will be put in the income statement, because this amount here has increased on the salary amount. Are we together? Then next, that means that in the balance sheet, in the current liabilities, since they are demanding us this money, we shall actually have to put this money here of accrued salaries in the current liabilities. Next time we shall look at the prepaid expenses.